Okay, time for Q&A. Last week's market outlook. Watching your short options portfolio management video from the Applied Options series, just had a few questions. Throughout the video, you compare total margin requirement and dollar beta weighted delta to NAV. However, since your examples use a leverage factor of 1, I wasn't sure whether NAV represents the portfolio's actual value or the portfolio value adjusted by the leverage. Well, if it's a leverage factor of 1, I don't know, wouldn't you just be multiplying it by 1? I guess I don't understand your question. So I'll pass on that. If my portfolio is worth 5,000, my target leverage is 1.25. Should I compare my margin requirement and the dollar beta weighted delta against a NAV of 5 or 62.50? Whatever your equity is. It doesn't really matter. It's whatever your equity is. Who cares what you lever it up? It's going to be a return on equity, not a return on leverage. If you're looking at just unlevered return, sure. But a levered return would just be a higher return on equity. But options already have a lot of embedded leverage in them anyway. So I guess I'm just still not understanding your question. So I will pass on it. Keep mentioning that you agree on how Q4 25, Q1 26 ZQ are priced, but disagree about how Q4 26 are priced. In what scenarios would it make more sense to isolate the later quarters by shorting April contract in addition to being long December? So shorting April just in case you don't get a rate cut in December, then April would absorb the 25 basis point hit and benefit you, whereas October wouldn't. Sure, but what if you get 50? What if you get 50 in October, and what if you get 50 what if you get 50 in December as well? What if you get 100 this year? What if the shutdown drags on and on and on? And what if inflation comes in really light? What if the jobs market really falls apart? I would be giving up the gain that I'm going for. So no, I don't know that I would be concerned about hedging out. So I don't know that I would do that.
Order partially filled.
What's getting filled here? You can hear that in the background. I've got orders. I've got orders out there today. Okay,
order filled.
I know that one. You mentioned working yourself out of any problem with high IV Bloom Energy has. Correct. Can you explain what you meant with a generalized example? Well, I sold puts at 80 and 60. So let's say worst case scenario, it blows through 60 and everything is put through me. With the high IV, I can sell calls against what's put to me and generate plenty of premium from that. In the end, is there risk? Yeah. No risk, no return. That's the deal in this game. If you don't take on risk, you're not going to get any return. So when I present a strategy, it's easy to say, oh, but what if this? Oh, but what if that? Yeah. Guess what? Yeah. that's the game. There's always risk somewhere. I scrolled all the way down. I don't know what happened there. There's always risk somewhere, right? So where did we leave off? Recovering any loss, listening to your options plays really interesting. And so there's enough premium in there that I can, depending on how we get there, I can always use options. And the idea behind using an option is you're not trying to guess what's going to happen. You're really just following one process. When something's working against you, you move your delta towards 0. That's all I'm doing. I'm not going to try to second guess everything and say, well, what if this happens and what if that happens? I move my delta towards 0. That's all. And sometimes it's the wrong thing to do. Sometimes if I had just sat there, it would have all been okay. Other times it's the exact right move to do. You do it for that one time that it's going to cause you significant grief. You always move your delta towards 0 when something is moving against you. Okay, things are going on in the background here. Consider a high vol stock trading at 85. The 5-month 95 put trades at 30. Yeah, but 5 months. Selling it generates 3,000 premium with effective break even at 65. If I turn this into a 65.95 put spread by using the 65 put for 13, I collect 17. Does a credit greater than 50% of the spread would justify a put spread on a high vol stock? I don't like those. I don't like those odds, and I don't know why you would do that. If it's a high vol stock, trade the vol a different way. This is not trading. This is not really trading vol. Not going out 5 months. No, I wouldn't do that at all. What would I do? Well, I don't know what the stock is. It's trading at 85. You say it has high vol. I don't know what high vol means. So you can always emulate gamma trading. I'm not saying exactly gamma trade, but emulate gamma trading. Or you can set up a trade today that gives you very low delta, almost zero delta if you can, but isolates theta and gamma. With the morning briefings coming up, the live morning briefings, I'll be able to explain more of that as we actually have an actual stock to use, as opposed to just theoretically. As well as selling puts, do you tend to sell calls on your open longs to earn premium? If so, do you aim to do this with all your longs? No, I don't do that with all my long positions. I do it on some positions that I feel, if like for example, Bank of Nova Scotia really ran up from when I bought it. So I had sold some $89 and $90 calls against it, figuring that, well, I'd sell it at $90 anyways. So why not get another, I think it was like $1.40. Why not get another $1.40 for it? If it doesn't hit 90, I'll keep it. If it hits 90, I'd probably sell it. So let's go ahead and do that. So I do that sometimes. But yes, I do sell calls. I do use the covered call strategy, but selectively. Regarding gold and other precious metals, do you have thoughts on whether prices are being driven by a short squeeze? No, they've just attracted the momentum crowd, and the momentum crowd is weak hands. They buy and sell, buy and sell, buy and sell. The moment they see trouble, they get out. So it tends to magnify the volatility in that. When you see an otherwise stable commodity acting like a meme stock, it's because the momentum crowd is there. Now, when they leave, they leave. So gold might be due for a significant pullback at some point, but the other day, I think yesterday, it was like $220. Those are stupid moves on gold, though. I mean, those are just stupid moves. Long-term macro predictions, such as what will be the state of the U.S. debt 5 years higher, and what will be the consequences. Zero interest rates. That's the only way. Do you have a prediction horizon that you don't bother to look past? Well, 5 years is fantasy to begin with. 5 years is just, you need really broad patterns to make 5 years. Debt has increased in the U.S. for the last 40 years. You've had trade deficits and fiscal deficits. Why do I think that'll change in the next 5 years? I don't think that'll change in the next 5 years. So something like that, you'd say it's more likely to continue on. That doesn't mean it's absolutely going to. It just means that if I had to today, put my chips on the table, red or black, I know which one I'm doing, right? I'd bet that it would continue on. I noticed you mentioned Trump will be in power till 2028, possibly longer. If he's alive, I don't think he's leaving, implying we know that Trump's going to do for the next 3 years, so that's a long enough horizon to work with. Well, I don't know what he's going to do for the next 3 years. I do know it's going to be volatile. I do know that he is volatility, period. and that he will slowly and slowly and slowly try to dismantle the institutions to make the whole country a cult. It must be about him. Everything must be about him. Everything. So that will continue on. What he'll do, I don't know. Beats the hell out of me. I don't know what he'll do. I think if everyone said he's going to do this crazy thing, he would do the opposite just to do the opposite. So if you want to get him to be less volatile, start saying he's so predictable he's going to do the volatile things, and tell him. Everyone says he's so predictable, he's going to do this, he would do the other thing. That's how simple he is. That's how easy he is to play. He would do the other thing just to say, see, you can't, you don't know what I'm going to do. He is easy to play. Recently heard a discussion on AI data centers where the host argued that investments might not yield strong ROI. Well, duh. As the main cost, GPUs have a useful life of only about 3 years. Yeah. By comparison, assets in past bubbles like railroads or fiber optics lasted much longer. That's true. The fixed asset had a much, much longer life. These don't. I've made that case before, that these billions and billions of dollars of investment, you have 3 to 4 years to get that back before the model that you're competing with is using a much more energy efficient GPU. Even over the last 2-3 years, the energy efficiency of the GPU has dropped, 80%? Or I should say increased 80%. The energy usage has dropped like 80%. That's huge. So you are in a red queen effect, which means you have to run just to stay in place. So yeah, all of this early money is going to have to be replaced, but the next cycle will replace it with cheaper product that's more energy efficient. Whereas the intellectual property amassed within the model doesn't disappear. So you could say, well, the railroad lasted, years and years and years. Fiber optic lasted years and years and years. But let's back it up a bit. The equipment that made the railroads depreciated and didn't last as long as the railroads, the steel on the railroads did. So the equipment that's making the model, we think, well, the GPUs are the equipment. The GPUs are not the equipment. The GPUs are the factory. The equipment is the model, the LLM. The LLM could last how many years and continue to produce cash flows, because that is what you're building. You're building the LLM. You're building the railroad, but all the equipment used to build the railroad disappeared long before the railroads disappeared, right? So maybe looking at the computers and the hardware and saying that's the equipment is the wrong thing. The equipment is the IP, and this is just the factory. But still, the point is, this early investment probably doesn't have a payback. What are views on current oil market? Very well supplied. Very well supplied. There's no shortage of oil. And I think if oil keeps going down, oil is the basis of almost all inflation in the goods sector. Because you have to transport everything, absolutely everything. So if you have energy costs going down, you have a lot of costs coming out of the system. So technology, AI, along with dropping energy prices, is massively deflationary. Surprised you don't believe Ben Bernanke did not see the subprime mortgage crisis coming. Are you surprised? Well, he may have downplayed the situation. I don't think he downplayed the situation in front of Congress. I don't think that he knew what was going on and just downplayed it. If he knew what was going on, a lot more steps would have been taken a lot sooner. He wouldn't have raised rates from 5% to 5.25% in front of it. I don't know if you remember that. The meeting before everything fell apart, he raised rates from 5% to 5.25% because of inflation. Inflation was almost 4%. A gallon of gas was $4, unheard of in the U.S., $4. He raised rates in front of that. He didn't know. The committee didn't expect any of this to happen. I think he told the truth in Congress that he felt it was contained. You're not going to go on record saying something like that if you don't believe it. He wouldn't have raised rates at the very least. He wouldn't have raised rates. There would have been meetings with the banks well before everything fell apart. There weren't. There were only meetings after it fell apart. So no, he didn't know. He didn't know. If you were chairman of the Federal Reserve, would you have told Congress that you believed there was a serious financial crisis looming? Well, you don't tell Congress you believe there's a financial crisis looming, but you certainly can raise alarm bells. You can do what Alan Greenspan did. There is a certain amount of irrational exuberance in this market. You could do what Powell have said. Parts of this market are showing valuations that are unjustified. You certainly can say certain things. But if you sat in front of Congress, say there's a financial crisis coming, it's hard to do that after you've raised rates another 25 basis points to cause the very thing that's going to happen. No, I don't think he knew. On volatility trades around earnings, you said that you only sell straddles. I don't sell straddles ever. On stocks you wouldn't mind earning. I sell puts below the straddle on stocks I wouldn't mind earning. What is your strategy in case the stock pops significantly? Well, I never sell the call. So if you were in your mid-20s with no existing assets and had the option to either the U.S. green card or Canadian permanent residency, which would you choose? I'd have to know more. 20s, no existing assets or wealth, citizenship from a developing country with no tax treaty with the U.S. or Canada, plan to live and work in the chosen country for about 10 years. U.S. seems like better short-term option. Higher income potential, more opportunities, I will agree. Global taxation makes it worse than long-term choice if you don't plan to stay there permanently. What would you pick in that situation? I believe I'd pick the U.S. But let's okay, I have to imagine that I'm not me, that I'm somebody coming from an emerging market. I guess my first question is, you're trying to make this decision today, right now. So I guess my first question is, are you white? It matters. In Trump's America, it matters. I hate to say it does, but more and more, it matters. So if not, then I would probably pick Canada. I don't know in a digital world if you have to physically be in the U.S. to fish in the U.S. pond. You can fish in that pond from anywhere in the world unless you need to be physically present to do something. But as much as it's a tough thing to say. Going to the U.S., would I do it now? Probably. I'm the right color, But if I were in my 20s, I guess taking all of that aside and just looking at it from an economic perspective, there is a different view in the U.S. towards business than there is in Canada. Canada is still very risk averse. It is about, you talk about deals, it's, well, what's the downside? What can I lose? You talk with Americans about deals, it's what's the upside? How much can we make? It's a very different view of business. Thoughts on Muller Industries? Metal fabricator, they done well. I don't know anything about Muller Industries. In the energy sector designation, do you also cover nuclear energy? I answer it here. Understanding small nuclear reactors will be added to the energy sector later this week. I don't get why Fed is more likely to cut interest rates if there's any more fraud in regional bank sector. Well, it depends on how systemic that is. Typically, if there is a solvency crisis somewhere, that's not a big deal. That can be dealt with a one-off here and there. But if there's a liquidity crisis, that's everybody. That is absolutely everybody, right? A solvency is a cancer. A liquidity crisis is a pandemic. You have to step in and do something there. And it depends on how far-reaching it is. So you have to add liquidity very, very quickly. cutting interest rates is one thing that can be done. Do you think we are in an economic reacceleration? Some sectors. Seems like GDP now creeping higher and higher, almost projecting 4% GDP with no data. Keep in mind there's no data, so I don't know how they're now casting. There is no economic data. So they have not been able to update anything. We haven't had a jobs report. We haven't had retail sales. We haven't had a whole slew of economic data to update GDP now. So it's going to stay there. Day by day by day, it's going to stay there. You can say, this is incredible. But there's no data. L1 Canada exam is February. I have the applied level. I don't know where to start because there's so much content. Is there a video that explains what is the difference between each part of the applied level? I will be putting up a video later today. There are big changes coming to the applied level because of the pace of change in AI. I have to keep shifting. So I will explain what changes are coming. With earnings this week, any way to get multiple position updates? I'm doing that in the Dr. Mark feed. I told you where. Here it is. With regard to your TLT and UST positions, how much do you worry about advanced economies like US trying to inflate away their debt? I don't know that I worry too much about that. A Trump-pressured Fed will likely end up dropping the short end significantly and then expanding the balance sheet to push down the long-term rates over the next year or two. Great, then I'll sell my treasuries. I'll say, like there's the interest component, there's the coupon, and there's the capital gain. If they're going to deliver me this great capital gain, why would I hang out for the coupon? Give me my capital gain, I'll be on my way. I have little faith that the U.S. plans to really address their debt problem in the short term. But Trump, in the short term they won't. Not in the short term. After World War II, few advanced economies had solved their debt issue through actual budget surplus, and those that did reduce debt mostly succeeded by inflating it away. Consider 70s and early 80s in the U.S. Well, I don't know if you can say that the 70s and the 80s was not an attempt to inflate away the debt. That was inflation that showed up, and when you have inflation, why not take advantage of the inflation that you have? But I don't know that that was induced specifically to inflate away debt. Monetary policy, fiscal policy, this loose? This loose? You mean like right now? Long end nominal rates could end up spiking a few years from now. Well, that's a few years from now's problem. It's not today's problem. I agree AI is likely deflationary in itself, but the narrative of productivity gains is also further fueling the stock market and creating a wealth effect among financial market participants that has kept American consumer spending. Wealth effect means capital gains. Capital gains means higher taxes. Higher taxes means lower budget deficit. Right? If you could make the market move in such a way that everyone became a millionaire overnight, just the tax haul on that could pay off 20% of the debt. So nothing wrong with higher valuations with a market turning over, generating capital gains, generating taxable income. Right? I mean, the higher the market goes, it doesn't mean the debt's moving up at the same time. The debt's not doing asset inflation like equities are. So let equities go to the moon. Let a whole bunch of people make a whole bunch of money and then tax them to pay off that debt. Nothing wrong with that. With the silver gold trade, aren't you making the assumption that gold is only moved by the precious metals component? So when you hedge silver with gold, okay, let me be clear. I said if you wanted to set up a trade that isolated the industrial component, if you want to praise God, go to church. That does not mean that I believe in God. That just means that if you wanted to isolate the industrial component, that's what you would have done. That does not mean that I was doing that. So, can you explain more in depth why the Fed funds rate is moving? Fed funds rate moving is concerning. Well, because it in a liquid market, it shouldn't move. Because it's moving, there must be something with the liquidity. There must be something going on. So while we're here, let's just, let me just refresh these screens here and let's just have a look. Yeah, we down to 4 billion on the overnight repo. Let's have a look at the effective federal funds rate. We had 411 last time I looked. We're still sitting at 411. We look at repo operations. Has repo operations continued on? Yeah, on the 20th we had another 2 billion. On the 21st another 3 billion. And normally this is a sleepy thing. It really is maybe quarter end that you might see something, but you're seeing it almost on a daily basis now, which means it's creeping in. It's not a problem yet, but it's creeping in. A few things I'm wondering about. It's good to see that you're being active on the feed again. Are you planning to start sharing your thoughts more often? Yes, I did do a live last night for the Applied Series subscribers explaining what is going to change in the Applied level. And one of the things is a lot more live sessions. So I'll have that video out on that for everyone else later on. Any plans for available slots for CR Seminar September 26 onwards? I'd like to book one right away. These things book up fast. I had 6 weeks planned for the spring. Overwhelming desire to go. I expanded it to 8 weeks. 3 are completely booked. Of the 5 weeks, we've got, I think, at least one spot of the 5 left. And a couple of the weeks have 2. We're under 10. I think we have fewer than 10 spots available out of, I forget how many we had there, out of 40, less than 10. I am in Costa Rica the last 2 weeks of November. I know it's short notice, but I have to go down to do there's some construction that's going to be happening, and I have to sort of approve everything and make sure that everybody understands exactly what's going on, because that's what you got to do. You got to say, tell me what you think you're doing. And I got to hear it. What do you think you're doing? Yes, that is what you're doing. And now how are you going to do it? Yes, that's how you're going to do it. And when are you going to do it? And if you don't do it by this time, what's your penalty? You got to be right on top of everything. But I will have spots for only 6, 3 and 3. I'm there for 2 weeks, so I can only handle 3 in each week. And these are the last 2 weeks of November. So if there is interest, let me know. I would need to know in about 2 weeks, by the end of October. Well, actually in about a week and a half, if I'm doing anything. If not, then I'm going to make different plans while I'm down there. What gives you conviction in selling puts for earnings vol? I like to see a lot of volatility. I want to see liquid options. I want to see a company that I would own anyways. A good quality company, because good quality companies sometimes have earnings that give you an opportunity to buy them on the cheap. But most companies fail to beat their straddle. And that's what gives me the conviction. Since you're not building intricate models, it seems almost impossible to have deep enough insight into potential inflection points for those names. Almost impossible? No. Building models. Understand what you're doing when you're building models. I think revenues are going to grow this much. I think cost of goods sold are going to be this. I guess. It's a mountain of guesses. So what's the difference between 57 guesses and 1? What's the difference, right? A model is not anything precise at all. There's really 1, 2, maybe 3 big drivers of returns for every company. The relationship between accounts payable and cost of goods sold, between accounts receivable and sales. What are the days that you're modeling 27.5 versus 28 to figure out your working capital, to figure out what the interest expense is? That's minimal. That's not going to make or break a company at all. For most of those line items, you can rely on the good management fallback. If you have good management, they're there to run the business. They know what they're doing. They'll run the business. They'll run the line items. That's not a problem. Your job is to figure out the 2 or 3 really big things that matter for that company. But these models, they are 50, 60 guesses deep. You're guessing on this, you're guessing on that. What's going to be the growth rate in subscribers? I think it'll be this. What's the growth rate in subscribers in North America versus Europe versus Asia? I think it's going to be this. I think it's going to be that. I think it's going to be this. Guess, 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 guess after another guess, another guess, another guess. Is there a recession in there? No one ever puts a recession in there. Is there competition coming that's going to obsolete the product? No one ever puts that in either. So a model is useful for measuring sensitivities only. That after you build your model and you think, okay, this is the way the business holds together, let me change the price of this by 1%. Let me change margins by 100 basis points. Let's see what happens to net income as that happens. It's good for sensitivities, but as far as determining, how well they're going to do, it's a mountain of guesses. Just a big mountain of guesses. Will there be updates to the Google Drive with the earnings infographics? Yeah, I've got the first 2 ready to go. They do take time to do, and I do need the earnings to happen first. Then I do need the conference call to happen. And a day or 2 later, you do have some kind of analysis that has happened as well. Then I can put them up. But I do need some content to go through to make notes. There it is. I say I do need the earnings call to happen first, and then at least some analyst responses. Can you go over what you would do if all trades go south? For example, Netflix break even 11.15. If it drops to 1,000, do you turn it into a straddle? At this point, I'm just going to let it run. Let's see where it is right now. We're 11.18. I will allow them to be put to me. At this price, I'm more than happy to be long Netflix. What else have we got here? I think we're fine on everything else. Yeah, we're good. Is ZQ a hedge as well? ZQ is a hedge if something really bad happens. Something that takes the market down 10 or 15% over a couple of days. ZQ would be a fantastic hedge on that. Saw your repost on LinkedIn on OpenAI hiring ex-bankers to build a cognitive domain emulator that can construct complex financial models. Sending a message that the analyst edge would lie on interpretation over construction. I believe that is true. Yeah, would like to hear your thoughts and takes on that. I've said before, months ago, that the idea of learning Excel, I think, is a wasted skill at this point. And people who, their hands just fly across the keyboard when they're on Excel. They know all the shortcuts. They can do this. They can build a model super, super fast because they can go from cell to cell, row to row. That's a dying art. In 2 years, that'll be dead. No one will do that. No one will do that. It is only a matter of time before the AIs move in and completely dominate this space because it makes sense. I'm seeing the same thing in education, that AI is changing the way we engage with learning material. We don't necessarily do it linear anymore. There was a time when linear learning made the most sense. I don't think it makes sense in a world of AI. I think using analogies, the spider web analogy or the mosaic analogy makes a lot more sense because the center of your web is going to be very different than the center of my web. So 15 years ago, 10 years ago, it was almost impossible to design a learning system that did that did it mosaically, that did it web-based. Or like a spider web based. Almost impossible to do that. AI makes that extremely possible. You just need someone to engineer the interface for that. That's where you still need a certain amount of skill level to get that done. for learning structured things, like preparing for a very structured exam like a GMAT or an LSAT. All of these providers that sell that, they're dead in the water. They just don't recognize it yet. But they're going to go away. Heck, I can think of a whole bunch of things that'll go away. One of the changes I'm making to the applied level is moving away from video more towards a mosaic or a spider web version of learning, because I do think linear video is dead as well. AI is going to make that dead, that rather than do it linearly, you can do it mosaically. And I think that probably is the better way to go. I'll explain that when I put the video up for the applied level and the changes that I'm making. Yeah, I think if you're going to spend your time doing any financial modeling, do the CFA stuff, which means you tell the model how you want to model revenues. I want revenues to grow by 6% for the next 3 years in North America, then taper out at 3%. I want revenues to grow at 15% in APAC, then 10% for the next 3 years, then taper out at 6%. You just give it what you tell it what you want, and then it will build the Excel model for you. Manus already has tools to do this. Claude has already introduced skills to do this for you as well. Now, OpenAI is probably just going to have hundreds of different templates. What industry are you in? Mining? Here's your template. You're in oil and gas exploration. Here's your template. You're in online advertising. Here's your template. And it'll just have a bunch of different templates depending on what industry you're in. And your job is to tell the model how revenues should be built out. What are the relationships between the balance sheet items and the income statement? And it'll do it for you. Done. Is the Costa Rica retreat focused on designing trading strategies, making investment decisions, or both? Both. What's your take on the OpenAI search browser and Google sell-off? Well, it didn't take long before Google bounced back on news that, now they're jumping into bed with another one. Claude. Besides, Google's AI browser generally sucks. I don't like it. I use Perplexity, I get answers. I use Google's AI, and if it's sensitive information, if it's political or anything like they're social or whatever, they give you links. Here's links. Well, that's so last year, right? So Google has trained me to use Perplexity. Now I use Perplexity solely. And this is what Google has done. When I use Perplexity, the same question keeps popping into my mind. How are you paying for this? Where are the ads? Who's going to pay for this stuff? OpenAI seems to have some kind of deal with Walmart going on. Maybe that's how it's done. I don't know. But Google, you got to wake up, man. One question not directly linked to finance, but to your lifestyle. How do you find time for tasks like cooking and cleaning? I have staff. At what point did you stop doing it yourself? Well, in Costa Rica, the house is too big. You need staff. I don't do anything down there. The staff does it all. Property, the horses, any general repair and maintenance, cooking, cleaning. I have a staff of 5, actually 4.5. And I got staff here. I got one person dedicated to the house here. I have staff. I'm struggling to find time to do day-to-day tasks and prepare for CFA 2 and doing my job and consuming applied series content. Yeah, the administration of life is time-consuming. Make sure that whatever you're doing, live in the moment that you're doing it. I can't tell you how important that is. We lose so much time under this mountain of stress about I got to get this done, got to get that done, got to get this done, got to get that done, and a day goes by and we haven't lived it. We've existed through the day in anticipation of getting things done tomorrow or for tomorrow. Live in the moment. Don't worry about all these things you got to get done. That's the fun part of living, is you've got something to do. So many people have nothing to do. And, idle minds, idle hands, that's the devil's work, right? You've got something to do, but just live in the moment while you're doing it. It would be the best way to hedge a long stock position. Well, I don't know if that there's a best way to hedge a long stock position without knowing more. Before I was buying in the money puts while holding the long stock. What a waste of money. Now I've switched to holding the stock and buying puts that expire in 1 month with a strike below the... What a waste of money. Why would you do that? You're paying for insurance continually. That's just going to eat away into your return. I wouldn't do it that way. My plan is to use the dividend from the stock to pay for the price of the put. Then why be in the stock? I also thought of using longer duration puts instead, ones that expire in a month. Yeah, that's... You're doing it wrong. Yeah, I would stop doing that. I'm planning to eventually leave my industry job and move into finance, accounting, education. You mentioned before how academia can be disillusioning and more focused on research over teaching. It is. Worries me a bit, and I'm more passionate about teaching. I would appreciate any advice and insight. Well, universities don't hire professors, they hire researchers, unless you go to a teaching school. But if you go to a teaching school, you don't make any money. A research professor, 120 to 150 a year. A teaching professor at a teaching school, 40 a year. That's the difference. You'll get no respect from the administration as just being in a teaching school. But then again, teaching is a form of public service. You don't really go into it to make a lot of money. But I will say this, as far as teaching goes, you won't make a lot of money. So you better love it. I have a question about how you're able to do so much stuff each week. Where do you find the energy? Single, no kids. Never been married. So there you go. Right? Every minute of the day belongs to me and me only. I don't have to share it with anyone. I don't have to compromise. I don't have to sacrifice. I don't have to do anything like that. Do you ever feel burnout? Yeah, you do. I consider myself a pretty focused person. Make sure to spend my energy on just the stuff that really matters to me. But even on some days, I feel like the overall energy level is just as much as yeah, that's normal. Now, there are some days I sit down in front of my computer and I think, ugh, I don't want to do any of this. And I force myself into it, and 5 minutes in, I'm like, no, I don't want to do this. I don't want to do this. So I get up and I walk away. I don't have to do it. My mind isn't in the right place, and so I won't do it. I have one life, and this day that I'm living today will never come back, and tomorrow I will have lost it. It matters more the older you get. You start to look at each day as, it's not something that I have to get through for tomorrow. It's something that I'm in right here and now, and I'm going to be in it right here and now. Any secrets to such great energy and productivity? Ideal number of cups of coffee in the morning or something. There's nothing like that. It's, if you're doing things that you don't enjoy doing, ask yourself, is it necessary that I do these things so that I have the other things? Or am I doing this out of obligation? And if there's a part of your life you're not happy about, change it. Sometimes unhappiness in one part of your life is like a cancer. It infects all the other parts of your life, and you feel, less than fulfilled in other parts because you have that cloud in your life in one part. Whatever that part happens to be, whether it be who you're with, whether it be your friends, whether it be the lack of your friends, whether it be You don't feel good in your own clothes. That you're not happy with your body. You're not happy with your diet. You're not happy with your level of education. Whatever it is, most of what is going on with you is in your control to fix. The moment you say, I can't change this, I have no choice, you lose all control. So it's always better whenever you're in a situation that you feel you can't change to say, listen, I have a choice. But my choices aren't very good. So I may as well continue to do what I'm doing. At least it gives you the power that you are where you are because of the choices that you made. But no, I don't know that I have any answer to any of this. It really comes down to you. But you're gonna have days where you think, this sucks, I don't want to do this. But if it's every day, then that's something you got to fix. If you start saying that every day. Can you explain how did you get the range of simple cycle, combined cycle, and efficiency? Well, this is something that is well documented. There are good .orgs that have this information for you. This is not guesswork. It's not as if you have to look in 50 places and like a detective put the numbers together. It's very well documented. Just use Perplexity and type in what is the electrical efficiency of a simple cycle versus combined cycle natural gas facility, a natural gas plant. And then you can take that answer, go to OpenAI and say, fact check this for me. Then go to Gemini and say, fact check this for me. Then go to Claude, fact check. Go to 5-6 different AI, say fact check. When Perplexity gives it to you, it also gives you the references. So you can look at the validity of the reference you got. And if it's from the IEA.org, it's like, wow, the International Energy Agency says this. I mean, it's not going to be made up stuff. But this is information that is out there and available. All right, that'll do it. I didn't have to write on the black screen once, so I'm just going to scribble on it just to say that I used it.